Okay, as promised. So earlier on in the live stream, I shared a projection to you guys on a trade setup that I put out this morning for the Platinum members. Now, what you're going to learn is the build-up, my thought process into why I assumed that there was going to be a recovery of price in Bitcoin today. I'm going to be going over a number of factors that you can use in the future to effectively determine if price is going to go in one direction or the other. So let's get with the program, ladies and gentlemen, and break down this Bitcoin trade setup. First things first, let's dive into the actual setup itself. So in the morning, what I do is I provide a breakdown on what I expect from assets across the board with regards to the Platinum members. And I give projections on 6 asset classes. So that's Euro, NASDAQ, Gold, Bitcoin, Ethereum, and Solana. Take a look at this image. You can see to the left that we have got the imbalance, okay? So remember this, there was an imbalance in price. We already had a big move to the downside, okay? You can see how price stabilizes at these lows. Now what I want you to pay attention to is, in front of you, what does the environment look like it's trying to do? And that's the first thing we're going to be focusing on. The environment. 1, what is it that you see? What do you see happening in the charts? So, can you identify, is there a vector imbalance? Okay, can we identify that? Well, let's just go back. Can we identify it? Of course we can. There's one right there. Okay, cool. What else can you identify? Can you identify any candlestick formations or patterns? Let's just go down to the bottom. You can see you've got a stopping volume candle. Okay, so we'll go back into our thing and we've got stopping volume candle coming into play. Okay, what does a stopping volume candle tell you? Well, it tells you that something's going to change. All right, go back into it. What else do we see? We see that in the New York session before, they had swept the Asian session low and made a quick recovery back up. If there's one thing that I say to you about the candlesticks is this: focus on the time spent in a specific area, okay? In other words, the less time the candlesticks stay in that zone, the more likely you're going to make an assumption that price is going to move away from that point. Go back into the chart itself and you can see. Look at these candlesticks here. Stopping volume candle, next 1, 2, 3, 4 candlesticks. They just moved away. And then in the Asian session, they tried to move as fast as they could. Look at the Asian session. You had a test of the daily open 1, 2, 3, 4 times, 5 times. And the violet vector candle came into play. What does the violet vector candle represent? Well, the violet vector candle represents that price is moving to the downside, but not as aggressively, because the alternative to the violet vector candle is what? The red vector candle, okay? But notice where it's appearing. It's appearing after a swing low has been formed. We wanted to see the entry of 87,396 to be triggered, to then see price try and make a bit of a retrace, because that's what you've got to factor in, because they can always pull it back, and then look for the target of the midpoint of the Asian session range, vector recovery, and then, of course, the 200 EMA, and then try and trade towards the psychological area, because that is where logic says that they had sold from previously. Now look at the chart. You can see that you've got an imbalance, and the imbalance tells you that participants were previously buying up Bitcoin on the drop, and this is the logic where they would want to try and make a return and sell back into that rally. So we've got the idea of the candlestick stuff. Okay, but now let's just factor in what's going on. Macroeconomically speaking, ladies and gentlemen, the day before we had $1 billion worth of liquidations hit cryptocurrency. So we can assume there's been a lot of people that have sold, okay? On top of that, you have got a lot of guys in long positions, okay, that are now favoring what? Shorts, okay? So let's just look at the psychology of what's going on back into the chart. Look, what do you think's going on here? They marked it lower. This is going to be the retrace. The logic says continuation to the downside. That's what the logic says. So what was it that was making me believe that price was going to move up and not resist the 50 EMA and drop to the downside? Eight days, ladies and gentlemen. In 8 days' time, the market is going to get its rate cut. That means money is going to be cheaper. All right? Alongside that sentiment, investors know that the yield on the dollar is going to be lower. So, I've basically got to get myself out of risk, which is where price in the actual chart has made the drop to the downside, and now it's making the recovery or the expectation of the recovery to come into play. What else was going on in the marketplace? You had this story of the Japanese. Okay? They had a wonderful bond auction. That was great. That logically means that the yen is going to be moving up, right? That means the euro is going to be moving up. That means gold is going to be moving up because of the strength of the yen, because of the strength of the euro, because of the weakness in the dollar. So already I have got macroeconomic data suggesting to me that the market does favor higher prices. So let's break it all down. First things first, have we identified the environment? Okay. So can we say to ourselves, what is price doing? What is price action showing me? What's the logic of the retail investor? Where's the retail's head at? Okay. Where's his head at? Is he thinking, oh, Bitcoin's dropping. Oh my God, let's sell? Identify that. And that's by looking at the chart. Can you identify it? Yes, we can. How do we do it? We find the imbalances. Is there an imbalance we can trade into? Yeah? Cool. We tick that off. Why? Because that's the red vector candle right there. Okay? Awesome. Next, candlestick patterns. What do we see? When I say candlestick, I'm talking about the hybrid system. Do you see stopping volume candles? Do you see candlesticks hitting the lows, but not closing strongly? Do you want to know what that looks like? Look at these red vectors. Can you see the vector candles? That they're closing down, but they're not able to close down at the lowest point. It means that there is interest inside of this range. They've swept liquidity. They've attacked the lows. And it looks like there are bids down there holding price. Okay? Let me show you another factor. At the time of the setup, when we refer to the spot order depth chart, okay, look what was going on. When this is red, it means they are actively in the process of selling Bitcoin. Look at price. Price was trading at the lows, but they were actively selling the Bitcoin, which means that there was going to be a markup coming into play. So they were selling Bitcoin inside of this range. But retail wasn't really jumping into the bandwagon just yet. But according to this chart, retail was stepping in, and you can see that is evident with the number of offers that were hitting. And this red stuff right here is telling you that there is only offers coming into play. So who's in control? The buyers or the sellers? The sellers were in control at that point in time. And if you notice what happened, we had a massive sell, which was that big order right there. And that effectively triggered Bitcoin's move to the upside because people saw Bitcoin's price rising. And that was evident from the move from the break of the 50 EMA. Now let's go and look at Bitcoin's price. Bitcoin as it stands right now has cleared the target. It's made its way towards the psychological low. It's hit our target of 90,371, completely ripped it apart. Now look at the environment. What is it that you see? You see how price is trading higher? It's clearing the ranges. The liquidity is coming in because people are actively buying the Bitcoin whilst participants are selling it into them. What else is going on in the marketplace? Look at the NASDAQ. The NASDAQ is up 1%. The same logic came through with Ethereum. We wanted to see Ethereum show sustainability of the green vector candle block, which is right there. We had the imbalance. They had the big sell-off. We've already gone through the idea of the macroeconomic data in sense of what we're getting in the next 8 days. We're getting a rate cut. Whatever happens to Bitcoin happens to everything else in cryptocurrency. We had an entry point at 2,823, and we wanted to see the target of price going towards the 200 EMA at 2,931 target. And Ethereum did more than that. Ethereum ripped it and just went all the way up to what? To the near enough the full vector candle recovery at the top side of the range from yesterday's sell-off. The same came through with Solana. We wanted to see Solana do the same thing. Vector candle block sustains. Price is going to hold out. The market's memory is going to get triggered because the guys that were bidding inside of this zone are going to offer again. That's going to naturally lead prices to go higher. Look at the environment. Imbalance present. Psychological ranges are the next point of interest in the chart. Entry at 128.24 to see the target of 134.31. 138. 139.88. This is not to be like, oh, wow, look at the setup, it flipping worked. That's not what I'm trying to convey here. I'm trying to get you to understand what evidence did you have, or I had at the start of the day. I didn't look. There was nothing here. Nothing. Some traders would look at this and think, oh my God, it's a resistance to the 50 EMA, drop to the downside. You'd be looking for this type of pattern. Look, you'd be going drop, retrace, continuation to the downside. What was the market looking like? Oh my God, it's all doom and gloom, sell, sell, sell. The news articles were saying that there was $1 billion in liquidation. So everyone in essence was favoring lower prices. The market gave us the clue. So, to systemize this, how would you go about your day going into tomorrow or the next day? What is it from these setups that you can learn about how to project price? Well, we know full well that we have to focus on what's happening around us. Can we identify vectors that we can trade into? Okay? Can we identify? That's the first thing. Now, I'm looking at vector candles close by. From the images, you can see that there were vector candles that were close by that showed an imbalance, okay? Can we identify candlestick structures, like stopping volume candles, okay? Can we see block trades, okay? What's price action doing? You can, in terms of conventional candlestick formations, do you see any bullish engulfing patterns, whatever it is that you look for, okay? But for the hybrid system, can we identify stopping volume candles? Do we have any block trades coming into play? Do we have candlesticks that are not closing strongly? Can we assume that the bids are holding price? And the way you identify that is if you see a candlestick, okay, with a big wick and it's still a vector candle, all right? You can make the assumption that the bids were down here absorbing all the selling pressure that's coming into the market, so preventing it from going lower, but just picking up every single sell order that's hitting the market, and the bids are coming in buying it up, okay? So you've got these two structures, but the main reason, and that's what you've got to look at, what reason does a participant have to buy? What reason does he have to buy? And I'm talking about the big boys. Macros. Yeah? So the setup, in principle, gave us a look into what the future could look like, because we understand that when assets drop, the bids are being hit. That means they are buying. Yeah? So when they're buying, prices are going down. When they finish their buying, price consolidates, holds, imbalance, and then the logic says what? The logic says that if the guys that have been buying are done with their buying, and they want to start making a return, they're going to offer price higher. So all the guys that have been looking at price going down are effectively the liquidity for the guys that are interested in marking it higher to sell into the guys who were previously looking at prices going down and now having to change their idea and now have to buy from the same participants who have been buying here, now want to sell here. And then that's where you get the recovery up. So has the setup given us the look into the future? From a macro perspective, yes, it has. Why? Dollar is losing value. So I better get my money that I've been putting into this asset and get it out. That's why it's gone up against the US dollar. The yield is no longer favorable. Investors need to get out of risk by selling it as it goes up into the participants that believe that the price of Bitcoin should increase in value because of the sentiment of the dollar. The game is rigged, but players who buy as it drops, sell when it rises, have to engineer this whole thing to get to the profit point that they desire, which in other words is and always will be yield. These setups are based on the psychology of yield. If it's dropping, I know someone is buying. There's going to be a point where they're going to want to sell it later on so they can make their yield. Now, what you've got to do, ladies and gentlemen, is go and do this same exercise. Find the environment, right? Look at the candlestick formations in terms of the hybrid system, okay? Where are you from a macroeconomic perspective? What's the bigger picture saying? In 8 days' time, man, we're going to get a rate cut. That means the yield on the dollar is going to be what? Lower. And what am I going to be sitting in dollars for? Look at the rest of the day. Look. We wanted to see euro make a move to the upside. So we had an entry point here, right, of 1.16115. Euro has taken a bit of a tumble down, but look at our entry point. 1.1665. There we go. So inside of that red vector candle, breakout of this 1.16115. 1.16115. There was the entry point right there. And then it came up, came down, and made a big spike to the upside. Exit at 1.16226. Did I get my target? No. But we got the move to the upside. We got the breakout. Then, of course, they marked it lower, possibly on the idea of what Putin had just said. Well, macroeconomic data. Putin had just said, if Eurozone wants to go to war, then we shall. That's not exactly the greatest thing you want to be hearing. Look at gold. We wanted to see gold make a move to the upside. Entry point at 4,196, favoring the first target of 4,212, and then the daily open, 4,231. What did gold do? On the expectation of what? Interest rate cuts? Look what it's done. But the entry was taken here. Where was it? Inside of this range at this 4,193. There you go. 4,196 was the entry point. 4,196 puts us at that zone right there. Shift out to the upside towards the TP at 4,230, which is what the actual target hit. It didn't hit the target, but it missed it by what? A fraction. 4,231. I was off by $1. Take your profits, get out. But look, the macro data. Dollar's going to be cheaper in the future. Better get my money into gold. Is it easy? No, it's not easy at all. But this is how you've got to approach it. Looking at what they have done, and when I say have done, I'm talking about the participants that effectively engineer price, right? That's what the vector candles tell you. They tell you about what is being prepared. Because when you go back into the setup itself and you look at Bitcoin, you can say to yourself, okay then, what were they doing? What did they do? Well, they marked it lower and they left this big gap over here. And I know what that gap is. That is an imbalance. And the market likes a closed shop, which means everything has to be in order. And if there is an imbalance, then it has to go and redefine that balance. Make it a balance. Make it happy days, an order, okay? Order within the chaos. And that's why we trade towards the recovery of the vector, because we assume that the logic of the market is going to come back towards that. Looking at what they have done is likely to reveal what they are trying to achieve. Okay? The achieve is not indefinite. Doesn't mean that it has to go from one point to the next to say it's achieved it. It could only take half your TP. It might not even go to your TP. But you have got to understand, what is it that they have done? How have they prepared price? Now, some of you might be like, well, who's they? Who are you talking about, Tina? Forget it. Forget about who it could be. Look at the behavior of price. What is it that it's done? Well, I got a red vector candle that looks massive like this. And now price is trading down here. I'm going to want to trade back into that just by the mechanics of the market. You've identified the environment for it. Cool, what's next? Well, do we have any candlesticks that give me a clue as to those guys who originally engineered price to come down to mark it up later on? Okay? What candlestick formations could I see? Whether it's the stopping volume candles, the block trade principle, okay? Is price trading above a moving average? Is it breaking above the 50 EMA? Is it breaking away from the Asian session low? Is it breaking away from the Asian session high? Whatever factors you pull together, you are presenting a case to say, yep, I think price is going to go to this point. Then you identify the whole story of the macros. What reason do we have to believe that the macro was the underlying factor as to why price went up today? Because the participants knew that we're getting closer towards the idea of what? Interest rate cuts. So money is going to be cheaper. So what they did was they marked it lower, and that expectation from investors is coming into play, allowed smart players to load up their positions on the bid side. When the bids come in, they buy, and when the offer comes in, they are selling. And you've got to try and work out if at the moment that you've identified what price has done, you are going to try and improve the probability of them moving price to the zone that you think where they started the move to where it's finished, which is the vector recovery. For more information on these sort of setups, ladies and gentlemen, just head over to the Traders Reality website and you'll be able to join as a Platinum member where you get access to these sort of setups. Now, I do provide them across 6 asset classes: gold, euro, NASDAQ, Bitcoin, Ethereum, and Solana. But the key thing is this, guys. We're not here to predict. We're here to react. Go back and watch this video. Highlight in the charts areas where you can see that they had prepared price and then how they effectively engineered the liquidity to go towards a zone that was a reflection of what they had done before. Going back into Bitcoin's price action right now, you can see exactly what the story is. They had sold off from the psychological ranges. They're doing exactly just that right now, because this is what they had done and this is where they have finished. With that being said, mad love and respect, and I'll be tuning into you all tomorrow. Peace.